Hello everyone and welcome to the EVN Disrupt podcast. My name is Vardanyan. I'm the editor of the creative tech section here at EVN Report. My guest today was Vardanyan. Gagan is a founding partner at FormulaVC, an early-stage VC firm in Armenia. We spoke about what the current global economic situation means for the tech industry, and specifically for Armenia's startup ecosystem. We also spoke about what may be in store for the VC landscape in Armenia as the industry matures in the coming years. Thank you for listening. Gagan, thank you so much for being here today.
Thanks, Nazirjan, for inviting.
Gagan, there's a lot to talk to you about today. VC investments and access to capital is in the news a lot these days, given the current global economic situation.
Sure.
But let's start with a little bit of your background. How did you get involved in the VC space and in the finance world?
Sure. We need to look back a bit to 2016, 17, how it all started. So our friends exited their startup and started to be involved in startup ecosystem building in Armenia. At that time, I was working at a bank, mainly in finance roles, and I was the finance guy in our circle. And upon developing various missing points, gaps in the ecosystem, like angel network, like startup incubator, we decided to have a investment fund that would be investing in mainly crowdfunding projects by providing like marketing funding. Why we started that? Because we had this crowdfunding marketing agency in Armenia, TCF, the crowdfunding formula. And so we started supporting their ecosystem, and it became some global vehicle, and it appeared this first of its kind. So this was how I got engaged into fund building, as we call it,
right,
with Sprint Fund. It was back in 2018 already. And so we were gathering a lot of fund management knowledge and how it all works, and how are things happening there. And parallelly, we were gathering a lot of knowledge in terms of startup investing with Bana Angels. And so we decided to combine these two. And it ended up with FormulaVC that we opened in 2021. Mm-hmm. Actually, we had plans to open it in 2020, but each time we were going to open it, something was happening. Like a week before we were opening it, pandemic was announced globally. Then we decided to open it in September. Then war happened, unfortunately.
Yeah.
So in December we decided, like, no matter what, we are going to open this fund, and we need some light spot in this gray environment after the war. So we decided to open the fund, and in the end we went through all these registration procedures, and in January it was registered, January 2021. In March we started the operations.
Right. Well, 2021 was a great time to start a VC fund in Armenia, because there's so much startup activity that we observed last year, and we're seeing some of that this year as well.
Yep.
How much did you guys raise for your initial fund?
This is our first fund. We raised like 7 million for that. It's pre-seed, seed, pre-series A, as we call it, investing fund. Yeah, early stage. And we invest mainly in like Armenian born or Armenian related, like Armenian founders or somehow located or born here startups.
What's your average investment size?
Average ticket is around 200K.
Okay, so that's 7 million. How long are you guys? What's the duration you're planning for that?
It's pretty basics, like 10-year fund with some 3-4 years of active investment period, and further time will be allocated for developing and all that. And with this fund, we aim to invest in some 25-30 startups.
Can you speak a little bit about what startups you guys have been investing in over the last year?
So far, we already have 9 investments, and 2 more coming up, hopefully this month or next. We started with CoinStats in 2021. It was our first startup. Then we continued with ExpertTech, Robot. The third one was Hexact with their 3 and now already 4 products. They are building some automation ecosystem for
data science
any kind of business.
And,
then Zoomerang joined our family with their cool app, so for TikTok, and all this short video editing. And we have Wild Learner. They are building a learning ecosystem for coders. And EasyDmark, which was, yesterday made some noise.
TechCrunch, yeah.
Yeah, at
Congratulations
TechCrunch.
on
Yeah. And further on, we invested in BlueQubit. That's
nice.
quantum computing startup. They are building an interface for, quantum computers.
BlueQubit, there hasn't been much news about BlueQubit, but it's one of the early stage startups that I'm most excited about in the Armenian ecosystem, because now we have a quantum computing startup.
The guys are really cool, and the team they have gathered, they are, I think it's going to be really big.
Yeah.
We hope so. And we continued with Docus AI. They are building telemedicine platform for hospitals. And the last investment we have done, it was like a week ago. It's prelaunch.com.
Prelaunch.com.
Yeah, prelaunch.com. They are building a product validation, idea validation platform for any kind of products, starting with hardware, ending with, any kind of gaming application ideas or everything.
Yeah. When you guys are looking for startups to invest in, is there a niche that you guys are particularly interested in, like SaaS or deep tech? Or?
Actually, we call ourselves as sector agnostic. We don't invest in gambling. We don't invest in really slowly scalable topics like biotech or any kind of regulated fields who are dependent on decision makings of some one or two persons to say. But we invest elsewhere. We love really B2B SaaS, which is we think it's easily scalable. Especially it happened so that in Armenia we have more or less many these type of startups.
Yeah.
And we look for some traction before investing. Look for some traction, be that users, be that revenue, be that experience of the founders. It is also, we consider it as a traction because, they can just start, but they have so much experience. It's worth, at least 500K of revenue to say.
I never heard that from a VC before. That's interesting. Yeah. In terms of what you see in the Armenian ecosystem, do you think there are sort of niches developing in the Armenian startup ecosystem of things that founders are working on, or is it quite broad?
I think it's both. In terms of industries, it's quite broad. As I listed our portfolio, you could imagine it's 9 startups, no any same industry. Yeah. Really diverse, but we have some strengths in terms of AI, in terms of data analytics, and that's why all of our startups, I think, they are exploiting this, and all of them have any kind of AI components, machine learning, or this type of to say scientific tools that they use and develop. And this is really cool because you need to base your project, your startup, your company into something innovative, and if it has some scientific background, it can really become disruptive.
Right.
But if it's something, like yet another platform for doing all the existing stuff just a bit differently, it can scale, but in long term it cannot be really sustainable.
That's one of the things that I think is really interesting in the evolution of just the global tech sector. Even if you look at the Valley, 10, 15 years ago, there was all these social startups popping up, and everybody had a social startup. But these days, it seems like it's much more really science-backed deep tech startups that are much harder to compete against. And that seems like the thing that has become the competitive edge for companies, because the social stuff has just become maybe too easy to do, and there's just way too much competition to bring something to market.
And nowadays there are so many tools to create some project. So one can create any kind of new projects from scratch without knowing any kind of programming or coding or everything. So it's really in terms of competition and scaling, it's not sustainable. So that's why the other type is winning.
Yeah. When it comes to the ecosystem in general, you've been involved in the development of it since it was far earlier than it is today. What gaps do you see in the ecosystem? What is there that really needs to be invested in order for us to go from the 80 or so or 100 startups that we have now to 1,000?
Sure. So actually, we call our system at it's just past its pre-seed stage to
Right.
seed stage. So it's still has a lot to develop. And one major gap that everyone knows in the ecosystem as well, it's education.
Right.
That needs to be invested a lot, and both in education process itself and the system overall. Because we need to nurture the upcoming generations, so that we have next generation of the startups. And there are some if we look at the landscape right today, we have some big players that came to Armenia, which is kind of a good thing,
Like
because
NVIDIA. And
yeah. Because if we look back how our ecosystem was developing back in late 90s, it started with again big companies.
Synopsys.
Where people were learning some problems there and gathering all the knowledge and combining with their entrepreneurial mindset, they were coming out of those companies and starting their own projects. And now with all these big companies coming to Armenia, we hope that we'll again continue this to see what are the global challenges, what are the global problems that these companies are facing from their internal already sources or internal teams, etc. So this will bring another generation of the startups. But this is not something scalable.
Right.
For becoming scalable, we need a lot of we need to invest a lot in education and in development of the coming generation, to say, of startups.
By development and education, do you just mean like more funding for computer science departments at our major universities, or is there something more fundamental than that?
Again, both. I think I don't know exactly how it needs to be done because I'm not really an expert there. But if we look at it, we be that academic education, be that some knowledge centers, be that some experience sharing, any kind of activities that first increase the engagement in the sector. So young population dreams of entering this ecosystem. Second, for these guys to have any tools to make their entrance to the ecosystem really flawless and with no any barriers, and to develop them further through, again, be that academic, be that training centers, be that any kind of incubators or whatever it is. But this is the gap that we see, and it is growing maybe every day. And if we don't invest there now, I think in maybe 5 to 7 years we'll have real problems.
I was speaking to another VC in Armenia recently, and they were saying that one of the reasons why in Armenia specifically, most founders come out of companies like, let's say, Pixart or maybe Service Titan or one of these larger players, or they have a lot of experience abroad working in tech companies, or they studied outside, is because, let me put this in context, in relation to founders just coming out of universities. Like in the US context, we hear a lot about people dropping out of school to then go up and start their startups, is because that experience at the university level is just not sufficient enough to really develop a founder, I guess. And it'd be interesting to see programs at our universities that are really outside of the lecture halls, things that encourage entrepreneurship. For instance, I was a student at the University of Rochester. We had a program where you could study for free a 5th year. You wouldn't pay tuition. You could take more or less whatever courses you wanted, and you did an entrepreneurship year. So you had to build a company or some sort of organization during that year, and they would help you with securing some funding. There was access to grant programs and conditions.
Very interesting.
And even if most of those startups or companies didn't really succeed, what was really important was those students getting a real taste of what entrepreneurship is at a time in their life when you don't have too many commitments, you don't have too many obligations, and you can really get that feel for it.
Exactly.
Yeah.
I mean, definitely, like the average age of a successful startup entrepreneur is not in 20s, definitely.
Right. Yeah.
It's above 30, 35 even.
Yeah.
But all that gives experience. All that
Yeah.
gives experience. All that gives the a flavor of
Yeah.
failure. It gives all the hacks and tricks how you need to create something and build something, everything. So yeah, it's really important, and we have couple universities that are doing that, but it's not enough, I think. Like I know AUA is doing Epic,
Right.
Agrarian Agritech, we call it Agritech University, though officially it's Agrarian University, but sorry for that, but we call it Agritech University.
Sounds better.
They have their internal incubator for this agriculture topic. So yeah, I mean, some of the universities, so this academic study wants to be involved in this type of activities as well, which is cool. But it's not enough. It's not enough in terms of the vision we have of Armenia becoming a regional or one of the global hubs in innovation. So for that we need to have this environment where both Armenian and not Armenian startups will come here, start here, and develop absolutely. From here. But for that we need to focus more on this universities topic.
It'd be nice to see some of the founders who have graduated from those universities invest back in building those programs. I think that'd be really effective.
Exactly. We have one example of CRISP AI Lab.
Right.
They opened it.
Yeah.
I think there can be other examples as well that I don't recall now. Sorry.
For sure.
But this one was the recent, so
absolutely,
we are really proud of that.
Okay, let's talk a little bit about what's going on in the world. So in 08-09, when there was the last financial crisis, the tech sector in some ways was sheltered from all that. It didn't get hit as much as other sectors. Now we're seeing a lot of hiring freezes at big tech companies. There's a lot of layoffs. Access to capital has become much harder. Let's talk about all of this first let's talk about maybe why this is happening. Can you tell us what were the factors that led to where we are now? Yeah,
so if we look a bit back in 2020 when we had COVID, and we thought that this is going to be yet another cycle of crisis after 08 or 09, but it didn't happen because a lot of money was pumped up into the world, to say.
Right.
And it somehow, passed mildly, and we all survived. And further, if we look already this year, then we started with this, turbulence in our north, to say. And
you're talking about the war.
So it all started, and it impacted the whole world with the logistic and economic chains, and of course the again economies of US, which is the major driver of venture capital and innovation, with all this interest rate thing, with all this inflation and everything. So the VCs became more and more cautious, to say. And there are a lot of startups who were trying to raise their late rounds, like Series C+, etc. But as stock market crashed, their opportunities for becoming public were delayed, to say. And all these expectations brought the market, we call it, to maybe like to 16, 17. Where we were seeing that the investment goes mostly to the startups that have really business models that can sustain.
Yeah.
And have some fundamentals that are working, not and they are mostly business driven, to say, and are getting investments to scale, rather than investment driven, and if you just switch off it for a day, it will be killed.
Right.
It will be dead. That's why a lot of startups who were really dependent on these investments thing, they started all these layoffs and stopped their growth, and now in a to say safe mode.
Because they don't know when their next financing round is going to come.
Whether it's going to be or no, and we are seeing a lot of big down rounds. The other day, SoftBank, their Vision Fund, announced their results, which was awful. they reported 20 billion loss.
Wow.
Like 23, I think, billion loss. And if you look at their portfolio, they had like, all the, like most of the major players that we know, but for example, they had one startup, Klarna. It was like biggest startup in Europe. It was like 45 billion or something in valuation, but they raised their next round with 6.5 billion.
Wow.
Yeah. So I mean, with all this happening,
it's like 15% of the valuation.
Yeah. And actually they raised like 800 million, but still with 6.5. So the thing is that with all this happening, VCs of course became more cautious. From another side, if you look at what's happening with their like LPs and VC money, all the major VCs announced their the rounds are closed, another VC announcements, etc. Of course, this was not finalized in June that they announced. It was finalized way earlier, maybe in February, March, or even in December. But they just announced that. So from that perspective, money is there.
Right.
But the approach and the strategies are changing. So all the VCs that were investing, in let's say early stages, now they are investing in Series A, Series B with more or less the same valuations.
Because they can afford those tickets.
They can afford because from a long-term perspective, all this overinflated part was washed out, to say.
Right.
And now all the startups who will survive this recession, they will become the next generation of big cohort.
Right.
This giant cohort. And if we project it into our own ecosystem, what will happen here? Again, this is the...
Maybe just before we get to our ecosystem,
sure.
I think for a lot of people who might not be from the tech world, it's strange to them, or they don't understand why startups need to keep raising capital every 18 to 24 months. Can you please explain a little bit why startups constantly raise investments?
For that, we need to look into the concept of startup itself.
Right.
So when you start some business and you call it a startup, it's you need to base it with 2-3 factors. First is the growth. How fast you are growing. Second is the scale, how big you can scale. These are the, to say, definitives of the startup. So if you open, let's say, a shop in your neighborhood and call it a startup because you just started it, it's not so fair to say. Right. But if you if you invent some know-how, I don't know, some new way of thinking, new way of doing things, and scale it worldwide, and report the growth for a couple months, which is a hockey stick, to say, then you can already call yourself a startup. Right. We always tell this to our startups we interact with. We love to call them entrepreneurs, not startuppers, who are doing business with startup model, to say, because their business allows them to have all this growth and scale. And so for maintaining this speed and scale, you need external funding usually,
right?
Because even if you are profitable, if you reinvest all your profits, it will not be enough to maintain the growth usually. That's what we have seen. Maybe actually not even this VC industry has seen in last 40-50 years. That's how it all was created, to invest in new things and help them to grow. But again, as I said, you can't rely on that all your way to becoming public company and all that. Actually you can, and people were doing it, but it came out not so sustainable, and when some turbulence started, they were washed out. If you maintain your growth or maintain your levels even without some external funding, and use all this external VC funding or external investments for growth, then it means that you'll be more successful than your peers who are not doing that.
Right.
Because even if some tsunami starts, you'll maintain your levels, but you'll not grow, but you'll survive. And after the winds are down, then you can already again invest in growth.
So the average sort of investment cycles for startups are categorized by pre-seed, seed, Series A, Series B,
Yep.
C, D, E, F, etc. Let's say all goes well, a company gets their seed round and they start building out their product, grabbing the market. What's in today's market, or actually let's say pre-economic crisis, what was the average life cycle for getting from seed to Series A and Series A to Series B? It's 18 to 24 months, or
it was even less. Like during 2021, the average timing for becoming a unicorn was 4 years and 8 months.
Right.
So, and because startups were becoming unicorns from Series C to Series D, to say, sometimes even from Series B to Series C.
Yeah.
But, it was not really healthy, to say.
Right.
So at that time, the gaps between the rounds were up to 12 months.
Right.
So, but now I think it will go back to maybe 16, 18,
that's
something
the normal
like
range.
this. That will be normal range. And again, depending on the overall market behavior and expectations, I think that's enough for the startup to, pass through one stage to another stage. This time is needed for, growing that much so that you are ready for the next round. This is the thing. So,
So let's now get to the Armenian ecosystem. Given these current trends, what's in store for Armenia's startup ecosystem?
Yeah, for Armenia, there are a couple of things to consider again. First, we have this small market advantage, as we call it, and all our startups from day one are working on to create some products on a global scale. This is a positive thing. Another thing is that most of the local investment vehicles ask for traction. Meaning again that from day one, startups know that they need to build some business model that will be easily, traction gaining. These are two components, and add to that also that our founders are hustlers. We call it them like that, and we invest in this type of founders who are hustlers, and otherwise you cannot scale from Armenia, to say. Right. And considering these three factors, and also combining with that we are in early stages of our ecosystem, as we said, and all the startups are more or less in seed, pre-seed stages, not counting the couple startups who are like post-Series B. We think the outlook for our startups is more or less positive, not so negative, to say, because considering all the above factors, their models are so that they have enough runways to maintain their levels, and we are advising them whatever you have like runway above 15-16 months, invest in growth, because your peers, your competitors are now tightening belts, and there is a lot of space being freed up in the market, because big players are not hiring, firing, etc., but the small players can invest in growth and get some proportion of the market. This is what we advise. And if we look at our portfolio again, all of them are really hustlers, and we love them for that. And we think that even if some of them in some mid to short term will not be able to maintain their business model that they were wishing to with their current vision, they will have enough time and resources to pivot to something new or something else, to say, because they are hustlers, because they have the runway and they have really good teams. These are the like key components. So that's why I think for our ecosystem, more or less the outlook is not so negative.
We'll weather the storm.
So, but again, there are definitely challenges with fundraising, with all the challenges that the world is facing. We are facing as well, more or less in some proportions. But startup game is a long-term game, and venture investing is a long-term game. So at any stage, you could hit this crisis. So it's good that we are hitting it in early stages.
Better than hitting it later.
Like imagine if you would be hitting it pre-IPO.
Right.
It would be, another big catastrophe worth billions, not, thousands or hundreds of thousands, right? That
Right.
you can,
Yes.
lose, get sad,
Yeah.
but, after a week you can get back,
Yeah.
get back to work and create something new.
So I feel like in terms of access to early stage capital, Armenian startups will be more or less completely fine. Because I mean, if you just take a look at your guys' fund and let's say Big Story, I think you both more or less said that you'd be investing in around 25 startups each, and let's say together you've probably invested in less than 20. There's capital enough for at least 25 startups, let's say. So then let's talk about startups that need to raise for a Series A, let's say. First of all, in terms of Series A funding, do Armenian startups look at the Armenian venture capital market for that, or is it mostly just outside?
So how that strategy works, we usually co-invest with local peers, as you said, like with Big Story, with angel networks. We usually co-invest with other VCs, SmartGate, Granatus, all the players. And in Armenia, you can get about $1 million plus in early stage funding if you are a really good project. Then Series A will come, or will be already popping up near the near future. And for making that strategy easier, usually we are trying to involve also some external funds, like from the Valley, from Europe, to be in seed rounds.
Seed round.
Yeah, to be in seed round, because anyway you'll be co-investing all together. So let's that big fund come and lead it, or
and then maybe they'll co-invest, etc.
They will either follow up, or they will have all these connections to introduce you. And also we ourselves are building our own network of the next stage VCs, next stage investors,
growth stage,
so that when we have these good topics who are going to Series A, good startups, then we are already recommending them so that they can pick it and invest further. So this is how usually VCs do. Like they create their own ecosystems of up to, let's say, Series B, and then after that I don't know, Series A investors will pick it up, go to B, C, etc. But you need to have these type of surrounding vehicles that will look at the project that you are investing in, will pick them up at some point, etc., etc. And even if there is no any exact vehicle, we as a VC we are rolling our sleeves and trying to help our portfolio as much as we can. Like we are always on call. They know that they ask any kind of questions and present any kind of problems that they have. We'll be there to, at least we'll try to help. And starting from cold outreach to some VCs. VCs are talking to VCs, but VCs are not usually talking to startups. This is some kind of industry relationships that have been we have observed. But I mean, starting from that, ending with hiring issues, any kind of daily challenges, whatever it is, or strategy developments, we are there to help. And that's the smartness of the money that we are investing. Otherwise,
it's not just that money.
Why would a startup take that money from us? They could take it from somewhere else.
So then we get to the companies, the Armenian startups that raised the Series A last year, let's say. Now there's at least a couple, Crisp, Super Annotate. Startups that are at that stage, do you think their Series Bs will get delayed for more than 18 months?
I think it depends on their internal strategies. I think both of them you mentioned and the others that we know are more of in a position that they can even wait to have more fundamental results for being preparing for bigger rounds. But I think they can sustain.
Got it. Okay. In terms of access to those later stage rounds, Series A, Series B and stuff, do you think we'll see VC firms in Armenia that specialize in growth stage rounds like the Series Bs? Or do you think we're just way off from that still?
Again,
because right now we're almost all of them are early stage.
Yeah. All of them are now early stage, but the next level will be like most of them will be again early stage plus Series A.
Right.
So in our ecosystem, everything is growing naturally, and the same thing will happen to VCs.
Yeah.
VC started a bit later on, like we had only one VC for a very long time, Granatus, then SmartGate started in 2018, etc. So it's developing really slowly.
Yeah.
But yeah, I mean, I think it will evolve, and as the startups will grow and pass through their, seed stages and go to Series A, definitely we'll have our own Armenia vehicles.
But do the Series A's and B's.
Yeah, and we also like plan to have our like next fund bigger and with seed and Series A, and so yeah, this is the natural process of running a VC. I think you start like with some topic. In Armenia, it's usually pre-seed seed. Then it evolves, your portfolio evolves, and you like broaden your focus, and then move to the next stage. And I think maybe even late next year we can hear some news
about growth stage.
VC about growth stage VC firms.
That's exciting.
We'll try.
Yeah. Let's get back to Formula for a second. In terms of sourcing deals, where do you guys find startups most often?
We are really active in the ecosystem. We used to run these incubation acceleration programs. Now we run an acceleration program with SAP, the German giant. So we usually sit in, jury in any kind of competitions or boot camps or whatever it is. So people know us, say. And we know the people, we know startups, and as soon as we see some light in the team, then we already start working with them. And hand to hand, passing this journey up until they will need investments. And be that like very early stage angel network will cover that. If it is a bit already like mature stage, then we will jump in. Or this is one channel to say. Another channel are referrals.
Yeah.
So when you invest in startups, usually they have peers who are doing other startups who no one knows about them, in their small rooms or garages or whatever it is. So they know that their peers have received some investment. They ask for, feedback. Hopefully that feedback is being good, and then they are coming to us. So this is how we source the deals, to say. And in Armenia, it is more or less we are in a privileged position to say for doing all this due diligence and knowing people, because the ecosystem is small and everyone knows everyone, and you cannot hide anything.
Right.
And if you even try, it will be really, really unpleasant thing for you to do, let's say, because it will pop up really, really quickly, and then it will become an issue for you as a businessman from Armenia. Your
reputation will be ruined.
But I mean, considering that it's early stage, there are some characteristics that we value the most. Because again, in the long term, the business can change all the shape, and models can change everything. But the team and the drivers of the team, the founders, the executors, will be there. So you need to have all this trust, and relationship that is built needs to be really, really strong. And our peers from Europe even say that VC relationships last more than couple relationships. So it's really needs to be really on a strong ground. That's why these type of things, like to say these essential skills or soft skills, how they call it, are super important for us. And
earlier you spoke a little bit about the SAP partnership. Is that with FormulaVC or with Bana?
Actually, officially it's with Bana. So it's, and as the name says, it's SAP Startup Factory by Bana. But as it's within our ecosystem, so we have access to all.
Can you speak a little bit about what that program is? Because SAP is a huge player in the global tech sector, and it's exciting that they're in Armenia.
Yeah, so back in, again, 2020, we had a guest from SAP. He was just visiting Armenia with a personal visit. He told about his activities, what SAP is doing in innovation, etc., etc. So they had this SAP IO program, which is the main acceleration program for startups. And he was telling us that how they opened it in Israel, etc. We listened to his story and told him like, why are we not opening one here?
Yeah.
He was like, why would we open it here? We thought, why not? And so he left, but the idea stayed, and we nurtured it further. And after again all these 2020 things passed, and also add on that SAP is a giant and slow mechanism and organism.
Right.
We in June of 2021 we announced the first batch of this acceleration program. The idea is that SAP is looking for ideas and startups who can complement their own products, to say, and to enhance their own services that they provide. So they are doing all these acceleration programs worldwide, so that they can, get any early access to these projects, to these topics. Because if they develop it in-house, it will take ages, and in the end they will not develop it. But they can, easily cooperate with startups in different ways. Starting with just partnership, ending with acquisitions. Why not? To enhance their own services.
Do they have a space here?
We have a space at Formula Hub. We call our spaces the factory. So we have the first factory in crossroad of Physics Institute, Fizika Hashmeruk, as it is called, in the park. It's really a cool and pleasant area. So you are welcome to have a coffee there. We have a cool coffee. So you are welcome. And so SAP has this program in maybe 5-6 countries. Yeah, the big tech hubs, and also in Armenia.
It's interesting how important those personal visits from these big giants are. Like if you listen to the story of how Big Story got started as well, Crispin Podcastle had a common investor that was in town, and it ended up leading to an investment. Guy, let's get to our last question. What do you hope to see for the Armenian investments, both for FormulaVC but also the general startup investment scene in Armenia over the next 5 to 10 years?
So again, before jumping to that exact question, I'd like to explore a bit more on what our overall environment for investment vehicles look like.
Sure.
So we do all our funds and fund building in Armenia, and all of them are like Armenia registered. Why we do that? Because first, we have really cool environment for that, starting from administration, ending with taxation and regulation. So of course there is some regulation with central bank and everything, but it's really light, to say, and it's not making any obstacles to operate. That's why we open our funds here, and we want this exact narrative that an Armenian-based fund funds unicorn, let's say, or to become a unicorn startups, to be there in the media and in the world, to say. And imagine, if we would invest with an Armenian vehicle in, I don't know, Skype or in Microsoft, let's say, and then we become really giants, and their early investors were from this country. Right. Okay, let's look into that, what they have.
What's going on there?
So, because as we are building a hub, and we want it to become a global hub, innovation hub, you need to have local players. If you are building a hub, but you have, you don't have any local people who are there, then something is, wrong.
Right.
Why would I come there if you yourself are not going there, right? So this is the main reason, and what we want to see for our startup scene in upcoming years again, to become a big hub. For that, we need a lot of startups. For that, we need to again focus a lot on education. So we want to see this younger generation. I don't know which letter they are calling it now, Generation Alpha, or maybe it will be already Generation Beta or something. So we want to see them, to be involved and engaged in this startup ecosystem more and more, even not directly being involved there, but whatever they do to nurture this innovation ecosystem, because we think that this technological advancement and technological development backed with scientific research and development, this is the way to sustain our country and to take it to the next level, considering all the obstacles that we have with being small, being landlocked and everything. So but with technology you can pass through all that obstacles easily and grow and become one of the key players in the world. And this is what we are moving
working towards.
Yeah.
Is Bana Armenia registered as well?
Yeah. Mm-hmm.
Does that mean that becoming an investor through Bana has different criteria? So for instance, in general, to invest in the US, which you have to become an accredited investor, which means you need $250,000 of income a year, or $1 million in net worth. Does that mean that with you guys, some of that stuff is less strict, or?
It's a bit different, not strict, but different. We always do this angel due diligence as well, and we as a fund have some requirements as well to invest. But as most of the startups are now registered in US, they have this non-US investor legislation, where they have different requirements, and we are getting into that. In terms of being difficult of running a fund from Armenia, yes, it is difficult, because first from the standpoint of gaining LPs, people just don't know what's going here, and if you are in US, everyone knows US. It's understandable,
the legal
jurisdiction and everything.
Yeah.
But if you talk about Armenia, they are not, getting to the second sentence to hear that, even from Armenia, you can have a vehicle that is, as compliant with all the legislatory things and these issues as like Delaware funds, or like Luxembourg funds, or any other, Cayman funds, let's say, where they're opening all the big funds. So but this is kind of a challenge for us, but this is already our second fund. And so hopefully as the time passes and as we'll move into third, fourth and other funds, it will become easier and easier.
I know I said that was the last question, but it's such an interesting topic that I want to explore it a little bit more. In terms of impact, just for Armenia specifically, like often there's a lot of conversation about, these are Armenian companies, but they're all Delaware C Corps, and in terms of taxation and stuff, Armenia misses out on a lot of that. Does being an Armenia registered fund, is it in many ways more impactful for Armenia specifically?
In that topic, I don't like this taxation point.
Okay.
I don't think, I myself, as an economist, I don't think that tax-driven, growth model for economy is really sustainable. But that's another topic for another podcast, I guess. So in terms of impact, if you look around and look how much impact this actually tiny IT sector is having, like there are officially 20-something K people working in IT industry out of our 3 million population. If you look at the impact, even like starting from hospitality sector, ending with all the other activities, the impact they are having, this is what is being driven by all this funding and startups and everything. And in terms of getting the funding from Armenia registered fund, I cannot say it has, really impact. Why would you take from Armenia registered versus non-Armenia registered? It is mostly impactful for the ecosystem overall as a mature hub, so that you have local players, so that when you are looking at Armenian startup map, you see that there are both international funds managed and driven by Armenian founders, and also Armenian funds who are again have been born in Armenia. So this is more of that kind of impact. But in terms of just investment impact, again, it's being invested in these international companies. So this debate about being a Delaware C Corp, I don't know, Singapore, I don't know what corporation, or maybe in Europe, in the end, you are building a global company. If you are not building a global company, then we need to revisit whether you are a startup or not.
Right. It takes us back to the beginning of the podcast.
And if you look at, like, I don't know, global giants, I don't know, Facebook, Amazon, whatever it is, I don't know, Facebook is registered in Ireland for tax purposes.
Right. Yeah.
Amazon hasn't paid taxes, I don't know, for ages. And
they recently started, I think.
Yeah. But I mean, but the impact that they are having, both positive and negative, for them, we can surely say, but it's like there. You can't deny it, and that's why I think we need to look at it more, from above view. And if you want to have like local registered startups to get funding from Sequoia, Anderson, and all these big guys, then we need to build a strong ecosystem.
Right.
Imagine we can build startups with our local resources up to, I don't know, Series B. And then, there are superstars rocking around the world, and they are opening the fundraising round. Of course, these big guys are going to invest in there, no matter what. They have all the legal teams to structure the deal so that it is safe for them in terms of jurisdiction, and it's doable. But definitely, they are not going to miss that opportunity to say.
I think this topic is, and it's a little bit of a touchy subject, but I think it's interesting to a lot of people. Of course, Armenian startups pay taxes in Armenia, especially in salary tax, and a lot of them are in the largest taxpayers list. But and of course, maybe tax-based economic growth is not good for many reasons. But in terms of when talking about things like investment in education or investment in security infrastructure for the country and stuff, all that comes from tax revenue at the end of the day. So as you see this growth, are you anticipating that that problem will sort of just fix itself through other mechanisms, or
no,
how do you think about that?
Here we need to a bit explore this topic. When people are talking that startups are not paying taxes here, they usually mean the profit taxes,
right? The corporate tax,
the corporate taxes, which are like more or less direct taxes. So when I'm saying like this tax-driven economy is not really what I really love, I mean this direct taxation. But of course, the model of the country and economy is so that it needs to be funded by the society somehow, and it needs to be reinvested into infrastructure.
Right.
But here is the debate starting about direct versus non-direct thing. And I am more of a non-direct, non-director to say, versus this direct squad. This is the thing. But of course, I mean, country needs to have the resources to invest it into infrastructure. There is another debate that why would country need that? Let's all the private sector do it, but I don't believe it is.
It's not realistic, I think.
Nowadays.
Yeah.
Maybe, in 50, 60 or 100 years it could be, but not now.
Yeah.
Not with the current model of countries.
All right, we'll explore this topic further in a future podcast, I hope.
Cool.
Guy and John, thank you so much for being here.
Thanks for having me.